Hello and welcome back to the Bitcoin Cash podcast, following Bitcoin Cash on its rise to global reserve currency. Today is Wednesday, the 17th of March 2021, and today we're going to be talking about cryptocurrency gets cool and the Bitcoin BTC bubble. Really important to note. We're not going to be talking about I guess we will be talking about it, but the difference between Bitcoin being in a bubble and Bitcoin being a bubble, which is a huge distinction of what's changed recently. No guest this week because I have not had a lot of time to line somebody up, and the previous solo episodes have been super popular, so I figured, well, give the people what they want. I personally like having a guest. I think it's fun to mix it up, but everybody's loving these solo, in-depth kind of episodes, so we'll do another one this week. Right, so let's crack on with it. First things first, the price, as always, USD $537 per Bitcoin Cash, so down a little bit this week from last week, about $40 I think, but also still solidly in the 500 range. It was down below 500, now back up a bit, and one Bitcoin BTC now buys 108 Bitcoin Cash. So Bitcoin Cash really struggling. It's been fluctuating. BTC, it's been up over 60,000, it's been down under 55,000, so the ratio does swing back and forth quite consistently, but BCH anyway, not doing particularly well on this individual day. Right, so the transactions are still stable. It's still more than 340,000 ish per day for BCH, so it's still outperforming BTC every single day, which is more in the between about 280,000 and 320,000. But for the last month, both BTC, which is capped, so it's not going anywhere, but down, and BCH have been pretty stable in their transaction volume. So I actually thought, and I'll acknowledge, I thought the BCH would keep growing and growing. I wasn't really expecting it to plateau off a bit here, but it has. I mean, I don't think it's the end of the world. I think it does sort of give some evidence that this growth is rather organic, because anybody who wants to say, oh, well, it's all spam transactions, or it's all just people using noise.cash to spam 10 cents for 20 minutes and then leaving it and forgetting all about cryptocurrency, that doesn't really line up. If there's 320, 330,000, 340,000 transactions every single day, somebody's doing that, and it's not if it's for an entire month, it's obviously not just one media event or one app going viral in one community, or something flash in the pan that just dies out, because we haven't seen that. So personally, I actually think it's quite a good thing. It shows that Bitcoin Cash is just consolidating its utility among a group of people, and that it will just slowly continue to spread, and we'll just have to wait and see what it is. But maybe something different will trigger the next huge set of growth. It's hard to know, but the point is that it's not capped, so that could happen basically at any time. It might not happen, but the potential is there. Where for BTC it isn't, and if there is something like that, if the BCH transactions do just start rocketing up, because a whole new crowd of people all get excited about it, then BTC is going to be left in the dust as far as transaction volume goes, probably forever, at the next big spike in transactions per day for BCH. But again, hard to know if or well, I don't think it's really a case of if, but when it will happen is more the point. Okay, so let's move on to some news. So, I I think one of the big things that drives cryptocurrency, which just drives the world these days, with the internet and everything, is obviously memes. Everybody loves a good meme, especially. I don't I can't I suppose even say especially young people because an older crowd, they definitely get in on it too. They don't necessarily always understand the exact format or the template that they're using, but they do give it a shot. So a little while ago, a few weeks back, I made this post where one of my favorite memes is this meme of the distracted boyfriend, for people who've seen it before, where basically there's one girl in red who is walking towards the camera, but she's sort of a little bit like blurred out. The focus of the camera is not on her, but she's walking out, and the focus is on this couple that are walking the other way behind her, which is a boyfriend and girlfriend, really. And so the boyfriend's in the middle, in between the girl in red, and his girlfriend is on the other side, is wearing light blue. So there's sort of a bit of a contrast, even though they're both brunettes, but they have these contrasting outfits. And the boyfriend is holding the hand of the girlfriend, but he's turned around to look at the girl in red. So he's ignoring his girlfriend on the right to look at this other girl on the left, and obviously her backside has particularly caught his attention, and he's got a look on his face like, oh yeah, I got to try and get me some of that. And then the girlfriend, as you might imagine, has this expression of not really disgust, but of surprise and just affront. She's feeling like, oh, what is going on with my boyfriend looking at these other women, right? And I think it's such a funny meme format, because then people put one word or one concept on the girl in red, one concept on the boyfriend, and one on the girlfriend, which is that the concept in the middle, the boyfriend is less interested in whatever the girlfriend one is, and is more interested in this other girl in the red, whatever that is, right? So I made this meme, which is the boyfriend, it just says transactions, and then the girl in red has the Bitcoin Cash logo on her face, and the girlfriend, who's being ignored, it has the Bitcoin logo on her face with the orange one. So it's the green and orange kind of contrasting it in the middle. It's just transactions, right? The idea that, well, people have got to make transactions. They've got to make financial transactions, and obviously with the fees being so much lower on Bitcoin Cash, well, they're gonna move over, right? And probably some of the people who do transact on BTC, slowly they're figuring it out, and they're switching over to BCH. You definitely see posts on Reddit, on Twitter, or whatever, of people who are saying, what is this fees of $10, $15, $20? And then of course people jump in the replies and say, look, you should check out BCH. And then if it's on Reddit, well, they get censored, then the comments get removed. So it's a bit of a narrative there. But anyway, so I made this meme. I thought it was pretty funny, pretty simple. Distracted boyfriend, Bitcoin Cash, transactions in Bitcoin. And then I saw, just coincidentally, a few days later, that this Cointelegraph, who I think are one of the Bitcoin news sites, they made their own version of it, where they actually drew, instead of having the girls, they replaced them with, they actually drew like a cartoon version of the coin with arms and legs sticking out, walking away or towards the camera, and the logos of the Bitcoin Cash and sort of a Bitcoin symbol replacing the girlfriend. So I thought that was pretty funny, and it's incredible how the internet picks up on things that you just put into the ether, and then it just remixes them slightly, or there's no need for attribution or credit, right? I don't think I'm some genius for coming up with this meme. I just think it was funny that obviously it hit enough of a chord with this other this other publication that they decided, look, let's do our own spin on that and put it in our put it in our article or whatever. I couldn't even find what was the exact article. I just found this image. So even with a reverse image search, so who knows what's going on there? But obviously somebody liked the idea, and I think it sets the stage a little bit for the idea of cryptocurrency spread being quite viral. I mean, it's unfortunate we're in a pandemic to use that language, but that's the facts, right? Ever since it started, it has moved as a meme or virally, right? It has a network effect, so it benefits from hype. It benefits from a lot of people piling in all at once, and then a lot of people getting more interested as a result. And so this kind of use of internet memes and so on has always been a big part of the Bitcoin story, because if you just sum up the right thing in the right way, maybe with a bit of humor or something, and get it in front of the right group of people, well, your adoption can take off basically just from that. I mean, obviously Dogecoin is the classic example of that, literally a currency that has very little fundamental strength in terms of its development community or in terms of the soundness of its monetary properties or anything, but it catches on. It's a meme. It's got the Shiba Inu picture, and it's funny and people can relate to it, and so a lot of people buy into it periodically when the mood strikes them. So I think it is very important for cryptocurrencies to have that viral potential, because if you do have that potential, you can't predict exactly when, but you're at least creating the circumstances for a huge spike in adoption. And if you don't have that potential, well, who knows whether it would or it wouldn't have, but if you don't have the potential, it definitely won't, right? So I think one thing that we've seen with this actually is this huge trend in cryptocurrencies of so-called NFTs, right? Which is non-fungible tokens. And this started on Ethereum, but I suppose it will spread around onto other cryptocurrencies, like Bitcoin Cash has it with SLP tokens and so on. And it's this idea that it's a token, right? So it's like a cryptocurrency coin, but it's non-fungible, right? Which means it's distinct from everything else. If you have a fungible currency, it means that if I give you a $20 note and somebody else gives you a $20 note, well, you don't really care which is whose notes, right? $20 is $20, and you would just trade that around to anyone. But if I gave you a piece of artwork, which there was only one of in the world, and somebody else gave you a piece of artwork, which is there's only one of in the world, well, those two things would have a very different value, because they were unique objects, which you couldn't just mix and match them without caring about the difference. So NFTs is really quite a fundamental usage of cryptocurrencies that has now gone a little bit viral, but it's really just a manifestation of people beginning to understand the idea of digital property, which is what cryptocurrency created, right? When Bitcoin was first released, it gave the world for the first time digital scarcity, that you could only have 21 million Bitcoins and you couldn't just copy and paste, right? Before that, you could have a Word document or you could have any digital object and people could just copy and paste 10 million of them, or 100 million, or a trillion, or an infinite number. And obviously you can't run a currency where people can do that, because otherwise the supply just trends to infinity and the value trends to zero. So you need to have a fixed supply, and humanity didn't know how to create fixed supplies of digital things until cryptocurrencies. And now that we've got cryptocurrencies, as this idea is sort of settling into the population, that you can have a limited digital thing, then it's caught on with these NFTs in Ethereum, where anybody who basically is famous can essentially just monetize that fame pretty directly by releasing an NFT which can't be copied. There's only one of it, and they can make it whatever it is. And it's actually, a lot of these things have sold quite effectively, even if it is things that can be duplicated, like for instance a image or a song or a video or whatever, people can just sell sell their NFT of this is my screenshot, right? Jack Dorsey, who was the CEO of Twitter, he sold an NFT of his first ever tweet for like I think it was hundreds of thousands of dollars, or it might have even been millions. I can't remember, but he recently did that. Again, it's a bit of a publicity stunt type of affair, but it just goes to show is that people will pay for that kind of something that is exclusive, even something as ridiculous as an exclusive tweet, which is publicly available and you can read anywhere as a sort of collector's item, right? People have collectible trading cards and they have collectible video games and they have ancient, old book collections, and people love collecting stuff, right? So if you can make something that people want to collect, like in this case these NFTs, there's obviously a market for it, right? So the potential for this has been around for a long time, but it's just only recently somehow got a bit of steam rolling in the online community. And so personally, I think this is great. This is amazing. This is the kind of thing that is cool, that people like this stuff, right? Cryptocurrency has always been cool after a sense, but it used to be cool like it was cool like drugs and hackers and online anonymous markets and anarchists and all this kind of stuff, which is cool. It's exciting and it's interesting, but it's also not very pop culture. It's not very friendly. People look at it and they think, oh, okay, I might just stay on the fringes of that a little bit, right? They're not going to be necessarily rushing to get involved unless they're particularly unless they're not particularly averse to it, right? Unless they have a particular attraction to that kind of thing, they're not going to get involved. But of course, as time has gone on and some of that stigma has sort of worn off, as a lot of early adopters have already all piled in and they've made it a bit more understood and they've talked to a lot of people about it, people have heard about it a lot, they sort of lose a bit of that sense of, well, it's something dangerous and fringe, and it becomes more something that's just kind of a bit cutting edge and a bit trendy, and whatever. And so Elon Musk has obviously recently invested in Bitcoin and is now excited about NFTs because he made this tweet, which I absolutely love, which says, "I'm selling this song about NFTs as an NFT," right? So obviously it's a bit of a joke where it's sort of referencing onto itself, right? But I'm gonna play it here. Let me see here. So here's Elon Musk's NFT song. I think it's all right. It's 2 minutes. We might just listen to it all in its entirety because it's pretty good. NFT. For your vanity, computers never sleep. It's verified, it's guaranteed. NFT for your vanity, computers never sleep. It's verified, it's guaranteed. NFT. Right, so and then it just repeats, right? So it's that exact same thing again. And for the audio listeners, the sort of video that accompanies this is this kind of trophy. It's this ludicrously gaudy golden digital trophy type thing, which is floating in space. And on the top, it has a neon sign in pink, which says NFT. And then at the base of it, it has the words "computers never sleep," and it's sort of rotating, spinning in space as this song is going on. And then HODL, HODL, which is the cryptocurrency meme of holding onto your cryptocurrency, right? And then these sort of little, I think it's the Shiba Inu doges in gold are on there, and then there's some sort of raised hands, and there's this huge kind of planet-looking thing. Maybe it's supposed to be the moon at the top, and these things circling around it. So it's all very like Ready Player One, and very cyberspace, futuristic kind of thing with a bit of a retro twist in the neon lighting and everything, and it's just so patently ridiculous. But it's very it's very attractive. It's very interesting. I watched this about 5 or 6 times because it's just the most ridiculous idea that you could own this extremely exclusive trophy in cyberspace, and that's obviously what Elon has made to share to everyone. So I don't know. He didn't really link to where he's selling it. I actually hadn't noticed it before, but he said at the bottom, actually doesn't feel quite right selling this. Will pass, right? So it's distributed for free. Anybody can just look at it on his Twitter. But he's decided he's not gonna he's gonna hold on to his exclusive NFT. But this has got 28.4 thousand retweets and 222,000 likes. So this is undoubtedly connecting with people. I mean, pretty much anything Elon Musk does on Twitter probably is going to get a huge amount of likes and follows, right? But it's just very engaging, and it's very viral. And I think one thing that people obviously it is a bit of a joke, right? The whole selling an NFT as an NFT, and his song about them, and the ridiculous look of it and everything. But the lyrics, which we heard there, so they are NFT for your vanity, computers never sleep, it's verified, it's guaranteed, right? And that's actually subtly some pretty clever lyrics. You might not think it at first glance, but obviously it has NFT. That's the whole point of the song. It's a song about NFTs for your vanity, right? So that's the idea that people just want these NFTs to sort of feel good about themselves, or to flatter themselves that they own one of a kind. They don't actually have any real world utility. You just feel good about owning them. Computers never sleep is the third line, and that's kind of going to the point of having a blockchain, right? It's this 24/7 thing that can't be switched off. It can't be taken offline. There's nobody in charge of it, and that we're moving into this future of where cyberspace is always going, right? Even for a while, people have obviously known about the 24-hour news cycle and how that's changed from when the world used to just be cut up into certain locations where, okay, this was the time that the day and night is, between these. So now the world is just this interconnected, perpetually running machine. And so even you think now the stock market, like with GameStop and the New York Stock Exchange, that only trades in certain hours. It's kind of ridiculous, right? People are more used to the idea that computers don't sleep. We should have the stock, the cryptocurrency, it trades 24/7. It never stops. So that's definitely hinted at here. He's sort of playing on that. And then the last 2 lines, it's verified and it's guaranteed. Again, sort of these nods to the blockchain, the idea that, that is the whole point of having a blockchain, that it verifies and guarantees the authenticity of your assets. So in the case of Bitcoin Cash, it might be that you can't get fake Bitcoin Cash, right? It doesn't happen. I mean, somebody could maybe lie to you if you didn't know what Bitcoin Cash was and tell you they were giving you some when they weren't. But if you understand how it works and you have a wallet that is on the blockchain and is checking from a variety of nodes, which they just do behind the scenes, then somebody can't scan that QR code and click send and your wallet will pop up unless they're sending you real Bitcoin cash. It doesn't. That is the entire fundamental point of the entire blockchain, was to perfectly track all of the different assets as to what goes where and who owns what. So yeah, these lyrics, NFT for your vanity, computers never sleep, it's verified, it's guaranteed. I mean, if Elon wrote this, if he didn't just outsource this to somebody where he said, ha, I've had this great idea, let's just do a joke about NFTs being, selling them as a song. If he did this himself, which I wouldn't say is even that unlikely. He has made a electro song before. Then this is actually pretty clever. To whether or not everybody who watched it just thought, wow, this is kind of funny and kind of a joke, or whether they caught on to some of that. Depends, I guess, how much they know about cryptocurrencies. But yeah, and I just think this is that's just all it is that now cryptocurrency is being a bit more approachable, and it is going into that sort of meme realm, which is just getting people comfortable with it. So the fact that it can now spread around, people who get interested in NFTs, they can get interested for any ridiculous reason, just because this is this funny thing. What's Elon tweeting about, right? And then maybe they look into it, and then maybe they get into Ethereum, or they want to buy their own NFT, or whatever it is, right? That's one of the huge strengths of cryptocurrency, is that you don't need to understand all of the hundreds of things that I talk about on this podcast when you first get interested in it. Yes, I mean, hopefully you do eventually, right? After slowly reading up more, listening, learning through experience, maybe over years or whatever, you understand all these different aspects to it. But to start with, it just needs to be one thing which gets you curious. It can be speculators that get excited because the price rockets up and they think they can get rich, or it can be people who are ideologically invested, who, when Julian Assange or Edward Snowden get their PayPal accounts shut down, they think, oh wow, that's overreach by the government, right? They could get involved for that reason, or in this case they could get involved just because there's some meme trending on Twitter and it happened to be one that they found funny, right? So this is just really shows that cryptocurrency, it's going mainstream. When I was thinking about this earlier today and how I would characterize or describe this, I thought of it as being, it's like pop music. It's cryptocurrency is going from being some niche, screamo metal or whatever that only appeals to a very certain amount of people, to being refined, or to sort of mutating its way somehow into the mainstream, something that most people can sort of get a hold of and think, yeah, it's not all rough edges and intimidating. It's just lighthearted and fun, and everybody can enjoy it. It doesn't need to be about these huge ideological battles or the state or fiat currency or any of that crap. It can just be about this is just cool and fun, and get involved, just welcome everybody to be involved. Low barrier to entry and so on. I think that's great, right? So this all comes right in the context of the Bitcoin bubble, which is very, I don't know how to say, but it's almost a bit destined, really, is that Bitcoin has gone up, and now it's hit over $60,000, and it's become this global story, in a sense, of cryptocurrency reaching new highs and everything like that. But even though its price is so ridiculous and it's at such a point of finance that it's worth more than $1 trillion, right? Which was, if you told somebody 8 years ago Bitcoin will be worth $1 trillion, they might think, oh yeah, that's never ever going to happen, right? Especially because it's now been 12 years, and there's this stat, right, that Bitcoin took 12 years to get to $1 trillion, and Google, one of the most phenomenally successful, globally adopted products and companies in the world, took 22 years, right? So Bitcoin is nearly twice as fast as Google to acquire that amount of financial relevance in the world. So it's done that on the back of this bubble, right? Where it's gone from $10,000 to about $60,000 between October of 2022 and March of 2021. And that in itself isn't really that noteworthy to me, right? This is not a new thing for Bitcoin, the fact that it's in a bubble like this. It historically has always had this pattern where it meanders along for a few years, then it gets hyped up, it goes viral, the price skyrockets, then it crashes, and it finishes higher than the baseline of where it was before, but there's sort of a very volatile up and down spike. So if we zoom in on what now looks like quite a small bump, the last one, which was in November 2017 of January 2018, where Bitcoin went from about $1,000 up to $17,000, and then it fell back to down around $3,000 or $4,000, right? And then it carried on until we got this latest spike. And before that, in 2013, of November 2013, January 2014, it kind of did the same, where it was about $300, and then it had this huge run up to $1,300, and it crashed back down, and it ended up, I think it was about $500, $600 at times there, right? So this cycle is very well known. It's not necessarily that noteworthy that it is in a bubble right now. But the difference, I think, having been in those bubbles, and there was even more bubbles before that, right? When I'm going to do a whole episode on Bitcoin, the bubble cycle, and breaking down every single bubble. I'll do that on a different episode to focus on it. But just the essential idea that this is not a new phenomenon, I think bears repeating, because for me, this time it is quite different, which is that even though Bitcoin has had this huge upwards increase in its price, it hasn't gone viral. Every other bubble, all of the previous bubbles, it came from some new breakthrough in the community, right? The price was obviously going through the roof, and that makes everybody, jubilant and overexcited, and the community goes absolutely bananas for a while as new people are just flooding in and everybody's interested, and Bitcoin just is breaking records, and there's news stories all around the world and everything like that. But it comes with, oh wow, this new huge retailer has accepted Bitcoin, and it would come from a big new step towards becoming the global reserve currency, exactly like I say in the tagline of this show. This time around, that hasn't happened, right? So I think here, so I've got these pictures that I took in London in the last week, where I've been seeing these signs. This company Luno has made these ads which say, so they've got one here which says on a bus shelter which says bus stop, says find out why everyone's talking about Bitcoin, and then a picture of the Bitcoin logo. And then they have another one here which is in the underground, which says if you're seeing Bitcoin on the underground, it's time to buy, and then the same picture of the sort of Bitcoin logo type of thing. So even though there is signs of Bitcoin spreading into the general population and appearing everywhere, right? If you're not somebody that regularly follows cryptocurrency, this is how it appears to you. You just forget about it or whatever, and then every couple of years, suddenly it's everywhere for 3 or 4 months. Everybody's talking about it, and then it dies off, and you think, okay, glad that's over, right? And then suddenly it does that again. And it feels like we should be in one of those periods now, and we are to some extent, in the sense of that there's these ads. I've also seen them on the red buses, right, in London. There's been a bunch of them around. But even in these ads, it's about the price. If you're seeing Bitcoin on the underground, it's time to buy, right? It's not, the ad does not say Bitcoin is taking over the world. It does not say 35 merchants in your area now accept Bitcoin. It doesn't say, have you traded Bitcoin for a Coke with your friend yet? Or have you bought a sausage roll or something, right? It's just about the price. Even the advertising is about the price. When the advertising should be about, oh, this is the future of money, and it's gonna be global reserve currency, and everybody's trading shit, or maybe it's hyping NFTs or whatever it is. But even though there is this sort of advertising for Bitcoin, there's no actual excitement, right? Tesla accepted Bitcoin as a bit of a publicity stunt, but they're not really doing a lot of commerce. It's not like a giant supermarket chain is going to accept Bitcoin because the fees are too high. No, I don't know, and I can't see any evidence anywhere of anybody earning Bitcoin, swapping over their jobs to earn Bitcoin or spending Bitcoin at merchants. There's not really any new commerce, right? It's just turned into this financialized bubble where previous bubbles, like I said, it would come from a big retailer like Steam, when they were selling online games, obviously, and they announced they're accepting Bitcoin, and then lots of people were buying these games from them, and I guess the employees of the company were thinking, wow, look at this new revenue stream we've got, and other people could look in from the outside and see, oh, okay, look, it's a real currency. It's actually happening. It's not just something that you trade on an exchange hoping to get rich, right? That there is an actual fresh economy being created here, and in this case there's absolutely none of it. So it just feels a little bit hollow, to be honest. This whole bubble, to me, it just is different. You can sense in the community that it's not like the previous ones, which was such a celebration of cryptocurrency spreading around the world. This time it's like, well, the price has gone up, and I mean, obviously, people who are invested are excited about that, but they're just excited about the price going up. It's not the price is going up as we're breaking through to the mainstream, and as more and more people are trading Bitcoin, and as my friends will now accept Bitcoin when I want to pay them back for a beer because it's really hype or anything. It's nothing like that. Nobody's doing that, and I think the listeners can probably relate, because I doubt any of them, any of you, I doubt any of you have seen that anywhere, that suddenly everybody's trading Bitcoins. No, they're not. If they are, they're doing it on an exchange to try and make US dollars, or to make some sort of fiat currency. They're not buying real goods and services amongst themselves, right? And the reason is, of course, that the fees. It's just so expensive, right? So over the last year, it's got here April 2020, the fee was about $1, and it's just sort of slowly been creeping up. So then in June it was closer to $3 or $4, and then by August, okay, now we're in the $6-ish range, and then November 2020, okay, it spiked up a bit and it was like $12, and then okay, January 2021, okay, between about the $6 to $15 or $16 range, and then February 2021, the lowest it was at $12, but up to even $24, and now in March, the lowest it's been at $13 or $14, and up as high as nearly over $30, right? So the fees are just ramping up, and probably again I'll sort of think that it will happen kind of at a faster and faster rate, because when you have a cap on something, if there's any increased use of the currency, the only lever is the fees, and the fees just climb up and up and up and up. And as more and more people want to be transacting their Bitcoin, when the price drops, there's just so many people that they just want to cram through their transaction that there's not really big respites in the time where the transactions aren't super expensive. And maybe previously there was, right? And that's why Bitcoin Cash was not necessarily taking off until quite recently, because even if the fees were slowly getting more expensive, well, there wasn't really that many people that were transacting for real goods and services, right, where it's quite time sensitive. Because if you're sending it to a cryptocurrency exchange to trade around, well, okay, if the fees are a bit high or it's a bit unreliable, well, I mean, it sucks. You sit there and fret about it, but it's not the end of the world. Whereas if you're at a shop and you're trying to buy a donut and you try and send it and it doesn't work and the merchant's looking at you like, what's going on? But Bitcoin was not being used in those use cases. So it didn't really matter so much that the pain was not felt by the end users as immediately as I expected, or as any, I think, of the Bitcoin Cash or the original Bitcoiners expected, because that was what we used it for. It was used for buying and selling goods and services in a real economy. So these fees have just been ramping up, right? And so I checked in on our Bitcoin, from which I was banned many many moons ago, but which has committed itself to this pathway of capping the block size, and anybody who has any alternative ideas is just a heretic and needs to be cast out and censored from spreading their evil ideas to anybody else. But I looked on their front page, and of course, like I was saying, there's been a lot of hype about the price, right? So it's at all-time highs. People are really jubilant and excited. But despite that, on the front page, I found this post, just coincidentally, the one time I checked in on it, which is by this poster, Summer Lover 69, and they say, if Bitcoin is going to be mainstream, we need to move on from not your keys, not your coins. Right, so this should be red warning lights, should be sounding claxons going off in the minds of any BTC supporters who actually understand cryptocurrency, because this saying, not your keys, not your coins, really does sum it up, which is that the idea that the whole point of a cryptocurrency is, like I was explaining with the NFTs, that they cannot be faked, but they only can't be faked if you're the one holding the keys, right? In a bank, you give your $10 to the bank, and then you just trust that the bank is not going to hand it out to somebody else, and when you go back, it'll still be there. But of course, the bank does hand it out to somebody else, and then when you go and get it, well, if some other sucker, if you aren't getting their money, if everybody tries to withdraw their money at once, it's called a bank run, and there's not enough money to go around, right? And so cryptocurrency fixed that by having the blockchain keep perfect and undeniable and publicly verifiable track of who had what, with no central person able to sort of change the numbers to their own whim. So that's the point of cryptocurrency, and I urge all the listeners to this call you should be looking after the cryptocurrency in your own wallet. If you want to buy some, obviously you can go to exchange and buy it, but don't just leave it sitting in the exchange, because if that exchange goes bust, or they vanish, or if the government decides they want to tax those coins or anything, they can just do it. That's if they're not your keys, if you do not own the private keys in your wallet, on your phone, or on your desktop computer, wherever you have them, if it's not in your wallet, it's not yours, basically. If it's with some other service like PayPal or like Revolut or like Robinhood or anything like that, you have essentially fake cryptocurrency, and you're just hoping that nothing goes wrong with it. So obviously there is a burden. So if you want to hold on to your own keys, you will need to learn what that means and how to do that, right? But do that education. I haven't really got an episode explaining all about that. Maybe I should do one, but there's plenty of YouTube guides, and just read up until you know what you're doing, right? But so this post says, SummerLover69 says, I realize what I'm about to say may be unpopular, but I'd like to start a genuine discussion on this topic. I understand what is being said when people repeat the not your keys phrase, but if Bitcoin wants to grow up, we need to get past that for a multitude of reasons. Full disclosure, I hold small amounts of Bitcoin in a hardware wallet, and I also have IRA funds invested in GBTC as well as some on Coinbase. Recently, I've been talking to family members about investing in Bitcoin, and I realize they have no business ever holding their own keys. I believe they are far better off using something like PayPal, Coinbase, Robinhood, or investing through GBTC, etc. These people are smart and educated, but older and not that tech savvy. Almost daily, I see a post here from someone that has managed to lose their coins in any number of ways. Yet, also daily, I see comments advising not to use PayPal, Cash App, Robinhood, or Coinbase to hold Bitcoin. Having a third party do the custodial duties is actually a valuable service to the majority of people. I know it's popular here to use hardware wallets and protect the seed words, but how will people handle that when they start to get dementia? I'm wondering what I'll do in a decade or three when I may not be as sharp as I am today. I believe insured custodial services are the future for the vast majority of future Bitcoin users, and we shouldn't discourage their use. So the sort of story here is that the reason that people aren't holding their own cryptocurrency is because it's too complicated, right? It's too hard, it's too difficult. And that's true to some extent. Cryptocurrency is hard and difficult, but the main thing it is just new, is that people are not used to it, right? And it's a kind of a Uncle Ben from Spider-Man type idea, right? With great power comes great responsibility. And that's what cryptocurrency is. Unlike the bank, where you're not really in control, you don't have that much power, unfortunately. Well, you also can't really screw things up. But in cryptocurrency, you're in control of your money. It's all you. So however good of a job you do, or however much you look after it, or whatever, then it's all you, right? And that means that then you can send any amount of money instantly to anywhere. But you don't get those kind of capabilities without also having the responsibility that you have to learn how to look after it. So once upon a time, using your email was too new and scary to people because they didn't get it, or they didn't understand, or they clicked on scam links and downloaded malware and all kinds of stuff, right? But eventually people learned, they figured it out. They figured it out by trying it out and by learning. And that's how cryptocurrency has always been. And that's why things like Dogecoin are excellent, because people can try it and they can lose all their coins, but hopefully they only had $2 of it, and it's not a big loss, right? But they learn by experience how it works. So in this kind of case, this user here is sort of blaming the complexity for people not being able to hold their own coins. But instead of thinking the solution is education, they think that the future is custodial services, that somebody else can hold your cryptocurrency. When, as I just explained, that defeats the whole point, right? If you have, when they say here, I believe insured custodial services, you know what that's called? That's called a bank. That's what a bank is. When the whole point of cryptocurrency is not to have banks. Cryptocurrency was invented to provide an alternative to banks, and yet the suggestion here is basically that we need the banks back, right? Which is completely missing the point of cryptocurrency. If you want a bank, you've already got one. What's the problem, right? But if you want something different, you want something that can't be inflated away or can't be arbitrarily taken away from you, or had like a haircut like they had in Cyprus, where they just took away, whatever it was, 40% of everybody's money to bail out the banks, all that kind of stuff, right? Then you have to hold it yourself, and that's what cryptocurrency provides. So this was just one user's opinion, right? I'm not saying that everybody agreed 100% with this, but they did get a bunch of these little, let's see, 3, 6, 8, 10. So they got 10 little, whatever they're called, gildings. They got 10 little awards from other users on Reddit. So there was, and there are 509 upvotes, right? So a few people thought this was a good thing. It was on the front page. This was not a niche opinion. And so somebody in here, Kitsune Mori, they responded with a question that sort of gets to the heart of the issue, but totally misses the point, right? So they said, a big part of why Bitcoin exists is to solve the problem of trust between untrustworthy parties. And just in case it's not clear to you, untrustworthy parties very much includes banks, exchanges, ETFs, and crap like BlockFi. The fundamental problem here is that they force you to trust them, and that means they can run off with your, in quotation marks, money. They can enforce arbitrary laws like KYC and stop you using your, in quotation marks, money in ways they don't like. To the degree that they keep their vaults private, they can even lie about whether your money even exists. They can engage in shady practices like fractional reserve banking or quantitative easing. They can do this because it's not, quotation marks, your money. It's their money. That is literally the bullshit Bitcoin was invented to fix. It simply makes no sense to wrap Bitcoin in an untrustworthy second layer. That defeats the entire purpose. The only thing I kind of agree with is that we can do better than that phrase. Instead of saying not your keys, not your coins, we ought to take action and develop some legitimate decentralized solutions that provide similar benefits without opening the door to corruption. So, and then somebody else replied saying these literally go hand in hand. If someone has the power to get your coins, a government or hacker can by definition force them to do so, right? So, and that hits the nail on the head, right? That's exactly right. That is the point of cryptocurrency. And if somebody else has your money, then it's not your money, it's their money. And what it said here, it simply makes no sense to wrap Bitcoin in an untrustworthy second layer that defeats the entire purpose. I agree with that 100%. That is what the early Bitcoin community knew, and it's what it's important to preserve in the idea of cryptocurrency, right? And so what is being missed in this entire discussion is that the reason people are not willing to hold their own coins is somewhat to do with complexity, but really it's to do with fees because in the past, or in the present on Bitcoin Cash, if you want to learn about cryptocurrency, you can send yourself $1 and you can send it around a little bit and get a feel for it. And if you want to send it to an exchange, you can do that and it just works. You don't have to worry about it getting jammed up in the network and not being able to sell it or not being able to buy some and hold it yourself, because it would be too expensive to send it out and then back in. If you buy $100 and you send it to yourself for $20 and then back for $20, well, you've already only got $60 left, right? But in Bitcoin Cash, where it's 0.001 dollars of fees, right? It's like so small that it doesn't even register. It's a rounding error. And that means that you can use it. You can hold your coins on chain. You can send them whenever you need to send them. You don't worry about, putting them all in an exchange or a Coinbase or whatever to look after it for you. But Bitcoin is not in that situation. In BTC, everybody is frantically trying to do everything they can not to use the blockchain, when that's the whole technology. That's the whole point, is that it was a blockchain. It's there to be used, right? Otherwise there's no value to it. And that's why Bitcoin is now a bubble. It was previously in bubbles. It went through those hype cycles that we looked at for many years. It would have those bubbles. It's even to some extent in one now. But this time around it's different, because this time people are not getting onboarded, learning about cryptocurrency and learning to hold their own coins. Instead, this time around, there's people that are just speculating on it and are so far removed from what cryptocurrency actually is that they've never sent it anywhere. They've just bought it in an account and they're hoping that it's going to go up, and they never got that hands-on experience with it or ever used it in any real commerce, because it just costs too much money, and they quickly find that out. And if they do try and send it somewhere, then they pretty much immediately make a post on Reddit saying, what is this scam? I bought $30 of Bitcoin and sent it somewhere. It cost me $20. What the hell? This is not like the future. And then hopefully at that point their mind is open that Bitcoin Cash or some other cryptocurrency does not have that problem. Hopefully they can find their way to that information. So let's think then about the price of Bitcoin and how it's going through the roof. And I want to say for the record that anybody is welcome to buy BTC, right? It's probably, money is draining out of the fiat economy into the cryptocurrency economy at an astounding rate, right? So I don't think that BTC is going to just instantly pop and just vanish and go nowhere, right? Probably the price is going to keep going up, right? Because if there's more and more dollars being created and there's less and less value in them, then there is at least a fixed supply of Bitcoin, and the price is going to go up. I think it's better to have Bitcoin Cash. You're not at so much risk, and there is a real economy being developed. But if you think you can make more value, more money in BTC, well, definitely buy some or hold some, or give it a bit of a try, right? Listeners can make up their mind for themselves. But let's just think this through a little bit, right? So the price of something is set by supply and demand, and in cryptocurrencies, the supply is perfectly known, right? I guess it does depend on some cryptocurrencies, but in BTC and BCH, it is perfectly known that there will be a limit of 21 million, which is released, in a schedule where it increases at a decreasing rate. So it's an asymptote, and basically every 4 years, the amount of new Bitcoin halves that is released. And so right now, between 2009 when it was first released and 2021, we've had about 18.6 million BCH and BTC. These numbers were from a few days ago, but essentially there's about 18.65 million BTC and 18.67 BCH, right? So there's slightly more BCH because they've mined a few more since the fork when they split, but they're pretty close, and that they're not going to diverge that much, right? And so by like 2036, it'll be like well over 98% of Bitcoin and Bitcoin Cash will have been mined, and that just final amount just tails out forever, and well, not forever, but until 2140, right? So a long way in the future. But almost all the Bitcoin has already been mined, a huge percentage of it, more than 18.5 out of 21 million. And the rest of the supply, crucially, it's known. So people can price that in the market. It's not some sudden surprise, unlike fiat currency, right, where the government announces, we're creating twice as much currency this month, and everybody goes, oh wow, they have a Federal Reserve meeting, and suddenly everybody has to react to that, right? The Bitcoin Cash network never ever does that. Everyone knows what the amount of the supply is, and that's it. It's already decided. So what this means for anybody who has ever heard the most basic thing in economics is that supply and demand sets the price, right? So if supply is known and it's already fixed, then what fluctuates to create the fluctuation in the price is demand. So let's look at what drives demand in BTC, and then we'll contrast it with BCH. So the first thing is fiat inflation, right? And that's what I was saying before about the more US dollars being printed, right? As there's more US dollars, more Australian dollars, more euros, more of every currency, more Venezuelan bolivars, as they just print away all these different ones, well, the value is obviously going to decline. So that creates demand for BTC. Now, the second category here is really interesting, which is coin burning. So I've got a video here that I'm going to play recently, which was by this guy who's a developer from Coinbase talking to George Donnelly about Bitcoin burning the supply. So let's just hear what he has to say about this.
Unfortunately, the incentives in this world are very wrong. So I'm going to describe you an incentive system. I'm going to ask you, as a straw man, do you think this is right? Okay. So he's saying he doesn't mind $20 fees. Let's just take that at face value, $20 fees. Let's graph out all the UTXOs on the Bitcoin network, and let's figure out how many UTXOs are in Bitcoin that currently are less than $20, because that's what he's advocating burning. Because all those UTXOs will no longer be spendable, because the fee to spend them will be greater than the value of the UTXO. So let's chop off 15% of the supply, maybe 20% of the supply, which is everyone that's stacked sats that have UTXOs less than $20. Now, that's actually in his benefit that those people all get robbed. Because burning all those coins means his coins are worth more, because he has larger UTXOs. Yes. This points out that Bitcoin A is completely not fungible. The amount of money a UTXO is holding directly impacts its actual performance on the network. So if your UTXO is less than the fee, your UTXO is worthless, you have no money. And if it's higher than the fee, then it's worth money. So effectively, there's this cliff where the value completely disappears. And so what Michael Saylor is saying when he says that is, oh, well, high fees are okay. So we're cool with burning all the supply of UTXOs less than $20. And maybe he's advocating for $1,000 fees, right? That means he actually wants to burn every UTXO worth less than $1,000, which would be like 40% of the supply. That would increase his holdings, because nobody else could sell their Bitcoin, because they couldn't send it to an exchange without losing all the value of the fucking Bitcoin. So their argument is just completely wrong. And if someone showed them a chart of UTXO utilization versus fees and the backward incentive of wanting to rob all of the people that have low amounts of Bitcoin to make their heavy bags worth more, then that's what they want to do, and I have no part of that. But that's what they want to do, that's fine. That's the incentive they are advocating. And it's fine if they want to do that and rob a bunch of people for their own wealth. But
so there you go. So that was from Josh Ellithorpe, who is a developer at Coinbase. He contributes to some Bitcoin Cash repositories and things as well too, right? So what he's talking about is Michael Saylor, who is this guy who runs a big financial company called MicroStrategies, and they have recently been investing in Bitcoin, and they bought a bunch of it, and they've been sort of a champion of the BTC Bitcoin community because obviously they're hyping it up and whatever, right? But what Josh is explaining here is that in Bitcoin, I mean, setting us all this stuff about UTXOs, if you didn't follow that, that's fine. Suffice to say that if you only have $20 of Bitcoin, in the simple sense, and the fees are $20, then you can't send it anywhere, right? It's pretty fucking obvious. And even if you have $25, well, it would cost you 20 out of those $25 to send it anywhere. So you're probably just going to wait and hope that the fees go down or that it goes ridiculously up in value, right? Because are you really going to send something for $20 to only spend $5? Like, that's never really an economical thing to do. And so if you look at all the distribution of Bitcoin around to everybody, then all of the people who have those smaller amounts, especially like they don't even necessarily need to be, maybe they have more Bitcoin in total, but let's say you have some of it on your phone, you have some of it on your computer, you have some of it on the exchange, right? You have it all in different locations. Well, then those individual locations are obviously much more impacted by those fees rising. And the higher and higher those fees rise, the more and more of Bitcoin is effectively burnt, right? It's unspendable, it's effectively gone from the supply, because the people who have the huge stashes of Bitcoin, like hundreds of thousands or millions of dollars of it, well, they can afford it. If the fee goes from $20 to $50, maybe it doesn't make them much difference from their point of view. But from the point of view of somebody who has $100, well, if it goes from $20 to $50, that's catastrophic, right? And so this is where we come to this demand drivers for BTC, which is as the coins are just burnt and burnt and burnt by the fees, the price is going to go higher because supply and demand, right? So the supply is shrinking, but it's shrinking because the whole network is becoming unusable except for the very, very, very rich. And what does that do? Well, it encourages everybody to hold their coins on Coinbase, on Robinhood, on whatever custodial services, which is what that user was saying that we just looked at before. So they're advocating for that. And even if they don't understand it, this is the reason. They are advocating for that, and people are naturally tending to that behavior anyway because it's so expensive to send on the chain, right? Okay, so we've got fiat inflation, we've got coin burning, and then we've got investors, right? And they're in two categories. So one is institutional demand. So that's like MicroStrategies, that's like any of the big Wall Street hedge funds, or if like a government decided they wanted to buy in, right, they would be buying, $5 million at a time. So for them, $20, $50, $100, whatever the fee, they don't fucking care. They'll just buy some. So they can create a lot of demand, but they're not impacted by the fee. So no matter how high the fee gets, they're probably still going to want Bitcoin, right? So that's part of the reason why we've seen this huge surge in the values, because a lot of these institutional investors are now buying in, and they're buying huge chunks, and they're not looking at, well, is this going to be sustainable as a real economy or anything, because they don't care. They just want to buy some, stick it in a vault, their digital gold, right? And then number 4 is, you have the institutional demand. Number 4 is the retail demand, right? Which is also just investors, but it's the little guy, right? It's just small households out there, right? Mums and dads or whoever it is, buying amounts of cryptocurrency, and they're going to buy $100, $200, $500, whatever it is that they buy. And for them, $20 fees, $30 fees, $50 fees, that's a lot of fees, right? And it's just going to keep going up because of that cap as more people. Like, even with how hyped it is, Bitcoin is only used by a tiny percentage of the world population so far. How could this ever scale to be billions of people? The fees, it's just not possible, right? So when you think about that, okay, fiat inflation, coin burning, institutional demand, and retail demand, none of those are real adoption, basically. None of those are merchants want it because they're trading for goods and services, or consumers want it to use apps that they couldn't use, like tipping people online, or NFTs, trading NFTs or anything. There's none of that. None of those use cases are supported when the fees are that high, and that is really, in the long run, what makes cryptocurrency successful, is that people want to use it to trade for goods and services. That's the whole point of an economy. So let's have a look then at BCH, right? So if we contrast that, what are the demand drivers for BCH, and how are they different or the same as to BTC? So the first one is fiat inflation. So it shares that with BTC. It's affected about the same way, which is especially because the coin supply is the same. As more and more US dollars are printed and so on and so forth, then it's better for Bitcoin Cash, because over time the value will naturally creep up in terms of US dollars just because there's more US dollars. But that process also creates, in the mind of the market, people, they realize, wait a second, my value of my dollars is constantly decreasing, whereas Bitcoin Cash is going up. Maybe I should have some cryptocurrency instead, right? Okay, number two, we've got institutional demand. So much the same as with BTC, you do have institutions starting to figure out, and I have this one here, Grayscale's Bitcoin Cash and Litecoin products are trading at premiums of more than 1,000%. This is quite outdated. This was from November here, but basically Grayscale are one of the bigger investors, Wall Street types in cryptocurrency, and they actually have done quite a portfolio, right, where they've got several different coins on the go. And I found this website a little while ago that had these really good stats of how many they had of each different coin, and what the difference was in the price between the price that you can buy on an exchange versus what their publicly traded asset was, because people could be buying in with their retirement funds and stuff to buy these, like it was a regular stock market type of thing. And so there's a lot of interesting stats there, right? So I don't have the stats right now because I couldn't find this website, but basically there are some people also buying Bitcoin Cash on Wall Street, just like Michael Saylor is buying BTC. And so there is some of that, but obviously less, and that's part of the reason why it's 108 to 1, because there's some percentage of that is lesser institutional demand. Now, for number three, you've got retail demand, which, like we were saying, small adopters, $100, $200, whatever. But the crucial difference here, I cannot underscore how important that is that a much higher percentage, I'm not going to say every single one, but obviously a much higher percentage of Bitcoin Cash holders will be holding on-chain. They will have tried out cryptocurrency, they will understand all this stuff that I've explained, and they'll be holding their Bitcoin Cash in their wallet themselves, right? And the security model of cryptocurrency is the opposite to fiat currency. In fiat currency, you put your money in a bank because the bank knows how to protect it. But in cryptocurrency, it's the opposite. When everybody puts their money onto an exchange, then the exchange gets hacked and all the money vanishes, right? In the fiat currency, you have governments and laws and regulations that can take care of that. But fiat currency cryptocurrency doesn't pay attention to that. In cryptocurrency, the way it's secure is because the effort to hack you, or your friend or your mom, every different person has their own different security arrangements for basically a trivial amount of money, according to a hacker. But if they can bust one exchange, if they can just find one flaw in one exchange, then they can get $100 million right there. Whereas it would take so much more effort for so much less reward to individually track down a certain person and try and figure out exactly what they've done with their cryptocurrency, right? So with Bitcoin Cash, the adoption it's on chain. There are people learning how to use cryptocurrency, and the listeners, I super encourage that. If you're new to Bitcoin Cash, if this is the first you've ever heard about it, go try it out. Go and buy $1 or $3 or $5, or ask your friend who has some to send it, or post in the comments and say, Jeremy, send me some Bitcoin Cash, and post an address and I'll send you 20 cents or something, and just start to get familiar with it as a new technology, because that's really important, and that's not what is happening in BTC. And as a result, in Bitcoin BTC, there's a huge fragility in their economy, because they're much more likely to suffer another huge hack, or they're much more likely to have, they're basically locked off now from having any sort of real adoption, right? They can't have people trading it for goods and services because it's just too expensive. So it's all going to be people holding it in Coinbase, hoping to get rich in US dollars, or people like Michael Saylor, who's just hoping the fees go up so that his huge stash of Bitcoin becomes more valuable and he can trade it off to some other bank, right? Because he's definitely not going to be trading off to small investors. And so but unlike BTC, obviously, there is no burning of UTXOs. There's no problem with the fees on BCH. So it is still just 0.001 cent, $0.001 to send, and it's going to stay that way, and that's the plan. So even though we saw the transactions are the same, the fees are low, and that's a really, really good thing. It means people can actually fucking use it. And what do you know? That's what's happening, right? And I think we are starting to see that virally spread around the world. So I have an example here of this guy, David Bond, who he got funded with 300 Bitcoin Cash, so more than $150,000, on this sort of promise that he was going to make these videos and market Bitcoin Cash in Thailand. So I've got this video that he made here, so let's just have a quick listen to that. He's at a restaurant where he can pay in Bitcoin Cash in Thailand, right? And here's what the owner has to say.
But now we have a deal that maybe as her salary, just a smidgen, just so she doesn't feel unsafe, I'm gonna pay her with Bitcoin Cash as part of her salary, and then the other would be just the Thai baht for now. You guys came last week? Oh, okay, that's her naked pictures. But anyway, that's another way to make Bitcoin Cash. So you guys gave her 300 baht. I think it was a week ago or 2 weeks ago, and now it's 314 baht.
Last time we came here, I gave all the employees $10, and she took a lot of interest in that. So I thought, you know what? Why not do it again and just do a little bit more.
Take a look. Okay. Wow. Thank you so much.
Tell your friends and send them $1, $1.
One baht, okay.
If you want $2, $2.
ดีค่ะขอบคุณค่ะ
People on the internet might give you tips.
Amazing ขอบคุณค่ะ Thank you so much.
And then you literally just swipe it and the bill is paid.
And then now I got his transaction within under a second. Pretty cool. I think I'm just gonna get a tattoo full of QR codes. No.
So yeah, as you can see from this shop owner here in Thailand, and she had an employee who said, hey, pay me a little bit in Bitcoin Cash, just because David Bond was spreading around. She thought, wait, this is pretty cool. And obviously the shopkeeper, she's accepting Bitcoin Cash, so she's getting it from customers so she can pay her staff in it, and then her staff can go to some other place, right? Apparently there's a few now in Thailand that are accepting it, and that's an economy, right? That's the whole point. It's a currency. It's a cryptocurrency, but actually a currency and not just a speculative thing in Coinbase or what have you, right? And this is amazing. This is what the whole point of it is, and this is what we're going to see more and more. especially in Bitcoin Cash, right? Because it's the one cryptocurrency that is focused on this, not NFTs, not digital gold, not holding it in a freaking exchange, not memes with Dogecoin. It's about actually making it a real viable economy. And so the important thing for me as well about this kind of scenario is that the market will kick off peer-to-peer in Thailand because like David was saying to this waitress, just send a little bit to your friends, right? And they won't need to have a Coinbase or an exchange that they wire their money to, and they can just trade amongst themselves. If they have, some Thai baht, she can just give it to her friend can give her some Thai baht, and she can just send them some Bitcoin Cash, and then there you go. It's just trading. There is no central exchange that can get hacked or regulated or anything. It's just going to flow around in their economy, and that will obviously spread around to everybody who's in the local area. And the people in that local area, even though cryptocurrency is volatile, and like we've discussed before on the podcast, there's an episode about volatility. What episode was it? I can't remember, but there's one about volatility. If you didn't listen to that, you can go listen to that and find out what the what the deal is with volatility. But there's even though volatility has one way to manage it, here is one way to manage it, right? Which is that if the currency just spreads around peer to peer, well, individuals obviously know their own financial situation, right? They know, okay, well, maybe if I only have 1% of my net worth or whatever in Bitcoin Cash, then if it goes up or it goes down, it's not going to be the end of the world, right? And so people are just going to the market risk is spread across all the participants, and especially if there's a lot of trading going on locally, then the risk is even less, because if they suddenly decide, wait, I've got too much or whatever, they could just sell it to somebody else very easily. So all of this is this kind of on-chain activity, and people can just onboard very rapidly in this way, right? Not like with BTC, where, okay, you have to convince somebody and blah, 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 like those ads on the underground of Bitcoin, you've got to buy it, and they've got to go on this service, they got all that stuff, right? They've got to submit their documents and get approved, and then wire in their money, and it takes 3 days, and none of that, right? It's literally just, she says to her friend, hey, download the bitcoin.com app, scan, send, done, right? It takes under 2 minutes, right? Under 20 seconds if you discount the time to actually download the app. And when you see that happening, or if you've done that yourself, if you've onboarded somebody to Bitcoin Cash, or you've been onboarded somebody to Bitcoin Cash, you know how quick and easy that is, right? So this can snowball very fast, and it's that kind of viral property that we were talking about at the start of the episode. So I'm super glad to see this, and this is what is going to drive Bitcoin Cash overtaking Bitcoin, right? Is because even if the market as a whole, which is largely predicated on speculation and these institutional investors and so on and so forth, even if they don't see it or they don't catch on right away, this kind of spreading around organically in communities that are actually using it for real trade, that's going to happen just in all these little pockets of the world until at a certain point, or at the same time, fees are just going up and up and up in Bitcoin, so that's becoming less and less viable, and at the same time, Bitcoin Cash is becoming more and more viable because everywhere you look, there'll be people starting to accept it for their little business and just trading it here and there, and just one transaction between two mates turns into 3 or 4 as their other friends get interested and they start sending around and they're trading for a couple beers, and then suddenly it's like, well, maybe I should ask my job to pay me 10% in Bitcoin Cash like this waitress did here, and especially if the price then kicks off, right? That's not essential actually, but it will amplify the effect, which is that when the price goes up, it has a thing called the wealth effect. You can look it up. It's a psychologically proven thing, which is that basically if the value of your money doubles, well, you're pretty happy to spend some of that, right? Because you think it's basically free money in your own mind, right? So and previous Bitcoin bubbles, like I was saying, when the price got up and the community was all celebrating, that's what would happen. Bitcoin merchants would see huge surges because Bitcoin holders would be happy to buy this and that they wanted, a new video game or they wanted a new whatever that they wouldn't have bought necessarily, except that the price of Bitcoin had gone up, so it was basically free, and they thought, yeah, I want that, I'll just get it. And that can happen in BCH, and it will happen whenever the price takes off, right? But it can't happen in BTC because the fees are so high that it massively just counteracts that effect. So you might be saying to me, all right, well, Jeremy, this all sounds well and good, but this is one cafe in Thailand. Like, what's, is it, maybe it's just that this one guy is just handing out Bitcoin Cash in Thailand. But it is happening elsewhere, right? So this is in South America. This is in Caracas, Venezuela. I've got a picture here of this guy, Angel, yes, Angel, I'm pretty sure, who is onboarding merchants in South America. So George Donnelly, who was part of that interview we saw earlier about the burning the UTXOs, he's in South America and he's doing the exact same thing, which is spreading around this idea of Bitcoin Cash as an actually tradable asset that goes between different people, and they're going to merchants and saying, look, could you accept this for payments? And then they're going to people and explaining to them, but what if you use this instead of the Venezuelan bolivar, right, which is hyperinflating? So everybody's already primed and in the mindset of this government currencies is not working, we need a different system. And so this is it happening here, right, in Venezuela. So I have these two examples of Venezuela and Thailand, Bangkok, but this is happening all over the world, maybe in some places more or faster than others, and maybe not down the road from any individual person, especially if they're not if they're in a rich area or a country with a stable financial system or high trust in the government. But in places where it's lower and in poorer parts of the world, in South America, in Asia, in Africa, those kind of areas, the ball is starting to get rolling, and that's what's leading to some of this increase in the transaction count that we've been seeing, and that effect is only going to increase. So because of all those reasons, that this is the dream. This is why I say following Bitcoin Cash on its rise to global reserve currency, this is how it gets there, step by step, and it's why Bitcoin Cash is not a bubble. It's just a new monetary system. It's just going to be a new, form of money, currency that is just traded around for real goods and services, and maybe it becomes more valuable than the USD, obviously, because there's more economic activity happening on it, more people building faith in this new limited supply type of system. But BTC doesn't have any of that. Nobody's actually trading BTC for real goods and services. It's all just financial speculation. And that's not to say you can't make money on it. Like I said, if you want to buy into it, you can. But it's about picking the top, right? Because at a certain point, it can subsume more and more US dollar value. But if there's no real commerce happening, it's not an actual sustainable economy. It's just you're buying into it, hoping that somebody else buys into it as well, which pushes the value up so that you can sell out, right? And that's just a cycle of everybody trying not to be the greater fool, who at the end is left with the Bitcoin when everybody else realizes, wait a second, I actually need to spend this, let me just sell it and get Bitcoin Cash. Oh wait, Bitcoin Cash does everything Bitcoin can do, but it's actually usable, right? I can buy a burger and my mate down the road will take it and stuff like that. With Bitcoin, I can't do really any of that. So yeah, that's pretty much the end of the episode. As always, the slides and resources are available at bitcoincashpodcast.com, and the show as well is on Apple Podcasts, Google Podcasts, Spotify, Stitcher, the RSS feeds. It goes out there, so if you're on any of those platforms, you can subscribe or listen to it there. I want to say a massive thank you to the donators for because in the last week there's been a lot of people have donated. Some people have donated a good chunk of money as well too, which has just been amazing. For me, I will obviously try and make good use of that money. So I do have some ideas. I'm a little bit limited at the moment with the pandemic still sort of winding down and everything. But I do, have some ideas, and I will be thinking about what are some good ways that I can put some of that money to use in, evangelizing Bitcoin Cash and spreading it around to everybody. So but I'm not a marketing genius, so we might wait and see what sort of form this takes or how effective it is. But I am thinking about that, and sincerely thank you very much to my pseudonymous Bitcoin Cash donators. But yeah, anybody who's enjoying the show, obviously you can do the same. Like I was saying before, just give it a go, try it out, buy a little bit of Bitcoin Cash, send it to a few people. It doesn't have to be me, but send it to somebody, and it'll start to click in your head. Oh wow, okay, it seems to be all mystical and special when you first start using it, but pretty quickly you'll start to just get over the hump of thinking about it as some big deal, and more just thinking about it just when you need to trade things for other things. Like you buy your milk or your cereal or whatever it is you're buying. You can just start looking for ways to buy it in Bitcoin Cash, and sometimes those opportunities will come up, and if they do, go for it, and as that convinces you that this is actually going to be future money of the world, the rest will sort of follow from there, and you'll understand. So no shout outs really on the show. The donators, that's the shout out is to them. But I hope you all enjoyed. I'll be back obviously at some stage with another episode. I've got a topic in mind and everything. Probably with a guest too. I don't want to do too many ones that are just me rambling into the microphone. But I hope you enjoyed, and until next time.
He pulled out his laptop and bring up the site. Looked at me and said, this will change your whole life. Then he started explaining the basics to me. The miners make money by taking a fee every time a transaction is made and complete, and they work every minute and day of the week. A guy named Satoshi created this all. He's the mastermind of it, the brain and the balls. There's a lot more to say, but before I begin, just tell me right now if you're out or you're in.